Joining me now for a closer look at what's playing itself out in that market scene is Greg Katzenellenbogen from Sanlam Private Wealth. Greg, a happy Monday to you. Thank you so much for your time today.
Thank you. Happy Monday.
Wonderful, Greg. It's a brand new week. I think lots to come this week. Keen to get your thoughts on what might be on market participants' radar for the next 5 days or so.
Well, the big things will be the interest rate decisions from the Bank of Japan, the Bank of England, and the United States. Obviously, in the US, they expected to leave interest rates unchanged, but I think there's definitely in September they will cut interest rates by 25 basis points. In Japan, they could surprise with an interest rate hike, but that's not guaranteed. And then in the UK, it's likely that they will cut interest rates, but they are warning the market not to expect, that one interest rate cut will be followed by another, because they're worried also about, the UK economy is expected to improve over the next year. So they're worried about how wages and inflation will go versus the risk of, if they don't cut interest rates, for strangling growth. So interest rates, that's what it's all about mainly this week. And then, of course, some more tech earnings coming, Amazon and Microsoft, Apple. So that will give us an indication of whether the Google or Alphabet results were, different, or whether the same will appear for Microsoft and these other tech companies, or whether it was a one-off for Alphabet. So that will determine whether we're going to continue to see a rotation out of the Magnificent Seven into smaller caps, or whether this is a buying opportunity.
Also interesting, Greg, to see, just with my reading this morning, it seems that some analysts are starting to then now be concerned about what happens as soon as we enter our cutting cycle in terms of rates. I think we've all concluded that at least by December, we should have turned a corner with rate cuts. But now the conversations around a soft landing, I think even here in South Africa, some analysts bring up a concern for, real recession. I'm wondering if this is something that markets are still concerned about, or if we're just looking forward to seeing those cuts emerge.
Well, I think, if you're talking here in South Africa, I also agree. I thought that the Reserve Bank would have, at the last meeting, cut interest rates, because there is a danger that they can tip the country into recession with such restrictive monetary policy. But I think globally, other than Japan, which was behind the curve when everyone else raised interest rates and they didn't, so they're now in a situation where they will be forced to raise interest rates, but the rest of the world is in a cutting cycle. People have been waiting for the US Fed, but they've been deferring that, and generally the European Central Bank would have waited for the Fed, but they decided to cut before that. And I don't think, hopefully now South Africa will cut at its next meeting, similarly to the US. But at the moment, it's the level of interest rates that certainly in the United States causing concern. The US are now they're expected to spend $1.3 trillion on servicing their debt. So if you think it's a problem in South Africa, they have a similar problem there. In fact, so much so that payments on debt is far exceeds what they spend on defense. So the world is moving into a cutting cycle ex-Japan, and we have to see now whether all these months and months of restrictive monetary policy, how it will play out. But I do expect that the US, either later this year or early next year, will go into some sort of recession. So I think the Federal Reserve, like other central banks, have to be careful of not falling behind the curve. They were behind the curve on the way up, and they have to be careful of not doing it on the way down.
Very interesting indeed. I also want to get your thoughts on what we are seeing with the U.S. markets. We've made mention of the fact that, of course, we've seen Alphabet and Tesla. This week, we are still waiting for other big techs to release their numbers, Greg. But another one interesting here, a bit of a sell-off in those big techs and more of the Russell 1000 stocks and those indices seeing some gains there. It looks like there's some profit taking there. I'm just keen to get your thoughts on that U.S. market at this time.
Well, I think that, so this is the big question. Are we now seeing, is the tech sector going to completely roll over and we're going to have a massive rotation into smaller caps? Well, I think that will become clearer as these results from Apple and Microsoft start to come through. So it's quite possible that their earnings could be quite decent and the market feels more comfortable again and treats us as a buying opportunity. But of course, if those results are bad, then we will probably see that the rotation into smaller caps will continue. But just bear in mind, it's 6 or 7 companies that have been driving the US market. You can see how the S&P 500 is done. But if you take the equal weighted S&P 500, you can see there's about 7 or 8% difference. So vastly, the 494 other stocks have underperformed those 6 stocks. And I'm not sure that it's quite sustainable for those tech stocks to keep powering ahead. So I think that some of these tech stocks coming down and letting out some air has been a good thing for the market as well, because valuations are just becoming unsustainable.
And then, Greg, of course, today we don't have much happening on the company news side, but Sasol out there with their appeal on the sulfur dioxide emissions seems to be good news. Share price up 3%. I think we keep getting these, bouts of good news when it comes to Sasol. But I'm still worried about the company as a whole and its future. And I'm wondering, if we could be focusing on these little green shoots as an indicator that Sasol can still emerge strong.
Well, the thing about Sasol is that its Secunda plant is the biggest emitter of gases in the world. So that's already strike one against them. However, I think in their results, they've written down the value of those operations. But I still think Sasol is a good company. And I think that it's quite cheap. I think that chemical prices are starting to improve globally, and I think that given that the oil price is pretty stable at the moment, I think it's good for Sasol. But obviously, what will weigh on the company going forward is the fact of that they're such a massive polluter and how they can tackle that. I think I would like to see Sasol, split into 2 companies and put their South African assets into one company and put their offshore assets into another company. I think that will do well for the company. So you can choose whether you want to be invested in a company here, which is the world's largest polluter, or whether in the offshore assets, which give you a bit of a rand hedge. But certainly, I think it's good to see Sasol in the green. Anyhow, I think the sell-off has been overdone.
Very interesting indeed, Greg. Never heard anybody bring that one up. I'm keen to get your stock pick, but first I'd like to take a look at counters that have found favor with industry peers.
Maybe a bit of a controversial one considering the news last week, but I'd like to talk about CrowdStrike.
Okay.
So obviously a major...
Brave?
Yeah, brave stock pick. So I think obviously a major outage over the last week.
Yeah.
I think incorrectly, I think a lot of people assumed it was to do with Microsoft. Obviously Microsoft Windows was affected, but it came from an update that CrowdStrike released. I think that's the first important point to note. It wasn't a cybersecurity breach because it's a cybersecurity company that would obviously be extremely damaging to the company's prospects.
Okay.
But I think just the sector in general, going forward, I think Sibanye-Stillwater had an announcement out today about a cyber attack they suffered a week or 2 ago.
Yes, yeah.
And I think we're all aware that going forward, cyber attacks are becoming more prevalent and becoming bigger risks to businesses. So I think the sector as a whole is definitely a place that we look at quite closely. CrowdStrike within that sector, despite the events of last week, is still a market leader.
This is one that has been quite topical at the moment. It's the iShares Russell 2000 ETF, code IWN. We've been holding this for clients in our global equity fund for quite some time. And really, it's an ETF that tracks 2,000 of the smaller cap US equities. But, that comes with a caveat, is that a small cap US equity can be, close to R1 trillion in value. So it's not micro caps by any means.
Yeah.
It's exposed to sectors that haven't been in vogue for a long time, sectors like financials, healthcare, industrials. And why I'm recommending it has really lagged the S&P and NASDAQ for a long time now.
All right, Greg, very interesting ones today. We've got CrowdStrike as well as that iShares Russell 2000 ETF.
Look, so on CrowdStrike, obviously what happened was pretty negative for the company, and you saw that reflected in the company's share price. So before rushing in personally, I would wait to see how things pan out for the tech sector over the next couple of weeks. But obviously, cybersecurity stocks are going to play a major role in the future. The world is a more dangerous place, and there'll be more and more of these cyber attacks. So I think CrowdStrike is a good company. Whether one should go in now and buy it, I would be waiting a couple of weeks to see how the broader tech sector pans out. And on the Russell, I think that you've seen, a rotation into some of the smaller cap stocks. The key question here is whether it's sustainable. If tech is going to completely roll over, that will be much better for smaller caps. But just bear in mind, be aware of the macro background, is that the US economy is slowing down somewhat. It's not having the growth that it had a couple of years ago, and that it's very likely that the US might go into a recession, if not later this year, early 2025. So on both those stocks, that I would just be a little, wait a bit before committing capital.
And with that said, Greg, which count are you going with this afternoon?
So I'm going with XBI, which is the US Biotech ETF. As I said, it's quite possible that the US tips into a recession. It might only be a shallow recession, not a deep recession, but a recession nevertheless. And of course, then defensive sectors will come to the fore, one of which is the healthcare sector. And in that sector, biotech, I think, is offering a lot of possibilities in terms of cell and gene therapy, but most of all in terms of weight loss drugs. And you've seen what weight loss drugs have done for some of the pharma companies, and a lot of these biotech companies are now working in that space and working on doing, instead of being an injection that you take once a week, you take a tablet. It's expected that the weight loss industry will soon approach about $100 billion in revenue. So you can see it's quite attractive. So I think from a sense that if we have to move more defensively, then the sector you want to be in is healthcare, and the subsector into biotech. And that's why I'm recommending the XBI US ETF.
Well, Greg, it's been a pleasure having you today. Thank you so much for getting the week going for us. That was your midday markets update with Sanlam Private Wealth's Greg Katzenellenbogen.